Welcome back to the channel. As always, if you're copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to talk today about a stock called QCOM Incorporated, ticker QCOM. What these guys do, they are essentially semiconductors player. So this is a rather long description. So I'll just summarize it by saying that they are a microchip provider, and the majority of the devices that they get involved with are automotive and mobile handhelds. Now, these sectors, automotive and handhelds, have been struggling for quite a bit. And that, as you can see here, is represented in this chart where you can see that the price of a stock has reached the 2022 highs, right? But it's come back to those levels. And recently has been declining ever since, shortly after the election. But this decrease actually that we see over the month of November comes after they reported earnings. So if we have a look at those results, we will actually see that the earnings themselves were not too bad. So you can see that they have multiple EPS beats, right? Both on normalized, adjusted, as well as EPS. And sales is actually doing okay too. However, why is the stock going down? Well, as you know, the US presidential election concluded with the victory of Donald Trump. And Trump has recently announced that when he gets into office, and that's expected to take place at the end of January, he will be imposing tariffs on Chinese goods. This presents potentially, most likely, an issue for the company because the chipset manufacturers are powering many of the devices that are sold by Chinese companies, particularly handheld devices. We're talking about brands like Oppo, Xiaomi, Huawei. That is one of the biggest problems that this stock could see. And the main catalyst that I foresee could be taking place in 2025. We could see headlines coming over saying, for example, revocation of export licenses of Huawei. And that could significantly threaten the revenue stability of this company. This is why, in my opinion, we are seeing the stock declining. And that's actually quite consistent if you take a look at how the year has been, right? Year to date, as over the summer, things progress, and it became more and more obvious that the presidential election was being uh, advanced by Donald Trump. This has been reflected in the stock price. So we had one leg down, and I think as the months go by, we could see another significant leg down. And as you can see here, there's plenty of downside. Now, let's look at the levels that we're sitting in. So we're sitting right around here. You can see that in this point here, right? Let's call that 150. That acted as a support level back in August. It was a resistance back in February. But if we look backwards a little bit more, right? Even in 2021, this was a key level. So I think that eventually the stock price is going to fall under that level. But I also think that we could have quite some trouble on arrive, probably a couple of months or maybe even more for this short idea to play out. Let's come back a little bit to the fundamentals because everything that I've spoken so far in terms of fundamentals is really backwards looking. It's things that have happened already. Aside from, of course, the catalyst that I mentioned, I think that's the biggest one. But there are also other things that I think could add pressure to the company. So I mentioned that demand for handhelds and vehicles has been soft for quite some time. And arguably, you have many companies out there in the sector that have been performing quite well. So you look at maybe a chart of the Nasdaq and the S&P, and look at uh, companies in the sector, and it's not unusual to see in the last 3 months companies that have been returning 30, sometimes more, right, percent over that period. This company is almost down 10% in that same period, okay? And what happens if we continue to see that softness in the market and the expectations for AI, which is what I think pushed the stock higher in the first half of the year, don't come to fruition? Yes, we're seeing that AI is returning uh, profits in some sectors out there. Some companies are doing great. But what about the ones that relied on the prospect of AI taking their capabilities of their devices to the next level? What if that doesn't really materialize? I think that could be a genuine catalyst here as well. And that will only start realizing as the sales, probably after Christmas, with all the different new technologies that are coming to market, are released into the public. Um, so with all that, I think that this could be a good play to introduce in our portfolios in the short book. In terms of risks, I think, like everything, AI has been well um, in the long side and in sometimes very successfully. We don't know if more um, innovation may come from that, but that could be a risk for this trade. And of course, we could also see that retail demand and consumer spending in places like, for example, China starts to recover a little bit earlier than expected. My view is that we're not quite there yet, but it could happen. And we have seen how, in some cases, the KPIs for this company have actually been increasing quarter over quarter. Nothing to be really excited about, but up nonetheless. However, with all that, I think there's room here for interesting play. I'm going to keep this on my watch list. I'm not going to enter it just yet. Remember, I said it may take a while to play out, but definitely one that we can consider. Is got good liquidity, it's got good spreads, and plenty of expiries. Hope you enjoyed the video. See you soon.